I'm Eddie Cannell.
And I'm Tom Cannell.
We're the Mortgage Brothers team at Signature Home Loans, located right here in Phoenix, Arizona. Everyone, welcome to our, 12th podcast.
12, holy cow.
That's right. And Tom, what are we talking about today?
All right, today we're talking about recasts, loan recasts. And we're not talking recast because you threw your fishing line in the wrong, swampy part of the lake. But this is actually what you would do if you need to change things on your loan. And before we go any further, Ed, why don't you describe what a recast is? Because a lot of listeners may not know what a recast is.
Yeah, so a recast is when you take your mortgage balance, you close on your loan, and let's just say a little bit of time goes by and you come into money. All of a sudden you have this large amount of money you want to put down towards your principal. You can make a big principal payment reduction, and the bank will give you the recast option to re-amortize that loan. So it isn't just making a large payment. It's actually, in accelerating your payoff. What's happening is they're going to take your principal, take your money, do a large principal payment reduction, and then do a re-amortization on that. So the payment's going to go down a lot lower.
Right. Okay. So they're not re-amortizing or changing the term of the loan. They're just re-amortizing the payment then.
That's a good point, because they're not, if you start with a 30-year fix and you let 1 year go by and you're making your payments, and then you do a large principal payment and you want to do a recast, they will amortize it over the remaining 29 years.
Right. Okay. So they are primarily recasting the payment.
Yes.
Okay. So you talk about, getting some money. That sounds nice. I mean, we all want money, but who in the world just happens to stumble upon more money? What are they mowing in their backyard and all of a sudden run over a bucket of money?
Yeah, that's right. I mean, for us, the most common situation we see is when someone they want to buy a house today and then sell their house that they currently own later. So basically buying a new house without a sale contingency. It helps them, so logistically, they don't have to move out of their current home and, find somewhere to temporarily stay and then move into their new house. What they will do is make it comfortable for themselves. If they can qualify for both mortgage payments, we often use this strategy of recasting. So the first type of person who would do this is someone who has a current home that they want to sell later after they buy their new house. So they buy the new house and then they sell their current home. They're going to have the proceeds from the sale will usually, a large amount. Because that's kind of goes to one of the requirements of a recast is that you make a principal reduction of at least $10,000 on the payment. But anyway, So that's the first type of person. You could get a large bonus from work. There's folks out there that will have a $10,000 plus bonus from a work, and they would want to maybe look at doing a recast. Let's just say there's an inheritance. I mean, that can happen. And so I would say those are three good examples. But the most likely situation is borrowers who don't want to sell their home with a sale contingency. Want to buy the new house and sell their current home later.
Right. Okay. Awesome. So it's kind of like being in a time machine, so to speak, where you get your loan done on your new primary home, knowing that once you sell your house, your current primary, once you sell that, later on, 5 months, 4 months, whatever it is, you can literally get in a time machine and go back to the day that you did your loan as if it were a smaller loan amount or basically a bigger down payment.
That's right. Okay, right. Because if someone could just take the example of the borrower who wants to sell their house after, right? They don't want to have their current home be sale contingent, or their pre-qualification. The form that we fill out they want to make sure that we fill it out without the sale contingency of their current home. They can accomplish what they originally want to do, which is basically put a large down payment, but they basically can do it later.
Yeah, that's nice.
Yeah, so time machine.
So time machines do exist.
Yeah,
I love it. Okay. Yep. All right. So what's next? People come into a bonus that they sell their home, and now they want to know, okay, what are the requirements that
Yeah.
we need to do?
So maybe you can go over the requirements here. I know that we've, what we did is we looked at all every lender has different requirements. Some are asking for, a couple extra months of payments. Some are asking, there's usually a small fee involved. So Tom, why don't you just go over all that?
Yeah. Okay. I'll keep it simple. So the first thing is lenders will typically like you to make at least one or two payments. So you're not going to want to close your house, your new primary, and then sell your house 2 weeks later, and all of a sudden ask for a recast.
Yeah.
So at least let one or two payments go by. So that's number one. Number two, the principal reduction can't be $1.85. It has to be substantial enough to where the recast is worth it, and that amount is about $10,000. There are certain lenders that will allow you to make multiple payments for that $10,000. So let's say that you're not actually getting any proceeds from a house, but you're getting a couple of bonuses. And you're like, hey, I'd like to make a principal reduction, but I don't have $10K right now. But I know I'm going to get, 4 bonuses of $2,500 each over the next 4 quarters. Well, certain lenders will let you actually apply multiple payments in order to get up to that $10,000. But usually people that bother with recasts will easily have $10,000. So that's the next big one. And then there's a very small fee, $100 to $200 in order for the servicer to actually go through and re-amortize and redraw up some of the actual, loan matrices and things like that. And then lastly, actually 2 more things. One is recasts are typically only allowed on conventional loans. So FHA, usually they're not allowed, and VA loans are not allowed.
Right.
And then you just can't go to the lender and ask for a recast if you've been late on your payment. So just make sure if you're anticipating, well, never be late on your payment if you can help it, but especially in the case of a recast, because lenders will be very sensitive to that.
Yeah. And I will add that not all banks will allow recasts. So it is something that when you're starting your loan, to have this conversation with your loan officer. Now, I don't know of any actual bank that doesn't, but the word on the street is there are banks that don't, or they may change their mind. So loan servicers who are servicing your loan today, if they sell that mortgage tomorrow to a new servicer, they may or may not allow the recast. The other reason why I think we should mention is because we can, if we're looking at a recast strategy, we should, as a loan officer, should know that up front. The borrower should be talking about maybe their options. Loan officer should be matchmaking the borrower with a servicer when they do the loan, right with the lender who's going to be able to accept that without any issue.
Yeah, good point. Good point. Okay, so what's next? They meet all those requirements. They've made at least a couple of payments. They have at least $10,000. They've never been late on a mortgage payment. They've got money for the recasting fee. What literally happens next?
All right, so, again, all banks are a little bit different, but the general rule of thumb is they want you to make your request to do a recast in writing, and they want you to send in the check or a wire or an auto pay bank transfer and the amount of the principal reduction, and they want the fee for the recast. So if they're charging 100, 200, 300, whatever it is, you're going to be sending those fees. And then once they've received it, generally that request takes about 30 to 45 days for that recast process to be complete. And then they'll modify your loan payments and send you a modification letter that details the new reduced monthly mortgage payment.
Awesome.
So a month and a half.
Okay. All right. That makes sense. This is a little bit goofy, but the other alternative, if you don't do a recast, is if you just do a one-time, principal reduction, and you don't care about your monthly payment going down, but you want your term to go down. So that is an option too that people can do. And I actually looked at a little example, and basically by doing a recast, by owning a current primary home and then buying a new one, your new house will have a slightly higher monthly payment because you won't have the benefit of the proceeds from your current home. And by doing a recast, you'd probably drop your monthly payment, again, just using a hypothetical with a very typical scenario, maybe 20 to 30%. And likewise, if you decided not to do a recast, but you simply want to do a one-time payment, keep my mortgage payment the same, but I want to shorten my term, you'd probably end up shortening your term about 30 to 35%. So you can go either way. And Ed, I was joking with you before the podcast started. If we were to make an analogy, it'd be like a foot-long sandwich. The recast, or when you do your original loan, it's a foot-long sandwich. When you do your recast, the sandwich is still a foot long. You're just, you might have less meat in there. So you're taking smaller bites, but it's still taking you as long to, eat a foot long sandwich. By doing a one-time principal payment reduction and not getting the benefit of a reduced mortgage payment, but having a shortened term, that's like getting a 6-inch sub, where you're not changing the amount of meat you have on that sub, but you're simply shortening that sandwich up to where you're literally finishing it quicker. So hopefully that makes a little bit of sense to people. I think most people would probably prefer the recast because they want to lower their monthly payment, but certainly people will call us all the time and say, hey, I don't want to do a recast, but I did get $2,000 from a bonus. Can I apply that to my principal? And the answer is absolutely. It won't lower your monthly payment, but it'll shorten your term, a year or two, depending upon the size.
Yeah. I think the recast is an awesome strategy. And I hope a lot of people out there, ask us about it. If you have any questions, it's great. It's one of the most, I think probably the most unused, kind of tool in the tool belt.
Yeah, I like it. Well, anything else?
That's it.
Okay.
Everybody have a good week.
All right. Let's call it a day. We'll see you, folks.
See ya. Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to Tom at azmortgagebrothers.com or yours truly at Eddie at azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisor before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.